Hi, this is a demo of MortQ, a mortgage payment and debt-to-income calculator app that you can use to estimate your ability to purchase a home using financing. The first screen of the app is your basic mortgage calculator, where you can enter the rate, term, down payment, and price of a property so that you can see the resulting monthly loan payment. The down payment may be entered as either a specific amount or in terms of a percentage of the sale price of the property. The Rates button on this screen will show you a table of representative loan rates for varying amounts in the different locations across the U.S. This table is updated daily to give you a quick estimate of what current rates are in a location near you. If you press on a rate, it will automatically read the rate and loan term into the app. In order to see if your income will qualify you to purchase a property, you must first enter the other required expenses for the property. Pressing Qualify will bring you to the next screen, where specific expenses such as common charges, homeowner association fees, and real estate taxes are entered. Real estate taxes may be entered as either a monthly, quarterly, or annual amount. You should also enter any additional recurring monthly payments that you are obligated to make, because banks and co-op boards will consider those payments in determining your ability to repay the mortgage. Other payments would be for monthly payments such as homeowners or private mortgage insurance. Other loans would be for monthly student or auto loan payments. The sum of all these amounts is your total monthly debt expense. Even though common charges and taxes are not technically debt, we refer to them as such since if you fail to make those payments, you can lose ownership of your property. The bottom of the screen shows you the total amount of the liquid assets you will need to purchase the property. Press the Closing Analysis button to enter the data to calculate those values. The top section of the screen is for entering estimates for your closing costs. Depending on where you live, you may have to pay a tax equal to a percentage of either the sales price or loan amount. In New York, for example, there is a 1.8% mortgage recording tax and a 1% tax on any sale price greater than $1 million. Additional costs such as attorney fees and title insurance can also be entered as a lump sum figure. Your real estate broker can help you estimate these costs. The next section is to enter a monthly multiplier for how much you want to have in savings immediately after closing. For example, if I want to have 12 months of common charges and real estate taxes in savings, I would enter 12 and then press the CC Maint and Tax buttons. If there are additional costs that I need to account for, such as to renovate the apartment, I would enter that estimate as well. The bottom of the screen will show the amount of savings you will need to purchase the property. These savings would normally include bank and brokerage accounts, but not retirement accounts. Pressing the back button in the upper left-hand corner of the screen will return the app to step 1 of the Qualify process. Step 2 of the app is used to enter your annual income. In addition to your employment income, you should also enter any investment or rental income that you receive on an ongoing basis. However, do not include investment income if you are planning on selling the underlying asset to make this purchase. The resulting debt-to-income ratio is a key figure in determining your ability to purchase a home. Banks will look for this number to be less than 40%, while co-op boards prefer a debt-to-income of less than 28%. These are not hard and fast numbers and can vary with both the property and your particular financial situation. The bottom of the screen shows you the estimated after-tax monthly housing expense that you can use to compare to what you might be paying in rent to live in a similar property. The 2018 tax laws reduced the tax advantages of purchasing a property, but the savings can still be significant, especially for single filers. Press the tax analysis button to calculate a more accurate estimate of your monthly tax savings. Here you should enter your filing status as either single, joint, or head of household. Since state and local tax deductions are limited to $10,000, enter an estimate of your state income taxes as either a whole number or a percentage of your annual income. If your income has not changed dramatically, you can probably use the state income taxes you paid last year as an estimate. Otherwise, you can ask your accountant for a percentage estimate to use. You will also need to enter an estimate for any other deductions such as charitable giving that you intend to make this year. Finally, you may need to enter your marginal tax rate. For most people, this will be about 24%, but for high-income individuals, it could be 32 or 35%. Check with your accountant for a good number to use. The bottom of the screen now recalculates the monthly tax savings. The monthly housing expenses listed here does not include the amount you entered for auto or student loans, since you would need to pay those regardless of whether you rent or buy. The monthly tax savings decreases over time due to the decreasing amount of interest you pay over the term of the loan. If I change the filing status from single to joint, you will notice that the tax savings decreases. That is due to the fact that the standard deduction available to you has increased from $12,000 to $24,000, and our real tax benefit is only calculated on the deductions we take above the standard amount. Pressing the back button returns the app to step 2 of the Qualify process. If you would like to save a copy of this analysis, you can email a report to yourself by pressing the Send button. You can then edit out any irrelevant information and forward the numbers to your real estate broker as part of your offer to purchase a home. Real estate brokers can use this feature to communicate with their customers if they are interested in a home where qualification may be an issue. The Save button will store all of the information you have entered into the app, so it'll be there next time you open the app. If you decide to close the app without pressing Save, then you will lose any information that you've entered. The Help screen reviews all of the screens and data definitions in the app. There is also a contact link so that you can send an email should you encounter any problems or if you would like to suggest any enhancements. That concludes our demo. MortQ is an app to provide a fast and private method to quickly assess if you can afford to buy a home using financing. Thanks for watching.